Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gives you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then. Forum Parekh of India Bulls Ventures, Vineeta Sharma of Narnolia Financial Advisors, and Avinash Gorakhshekar of Joindre Capital join me on the show. Many thanks to all of my guests for joining in. Today on Hot Money, we'll discuss will fourth quarter be a good quarter for multiplexes? So that's some of the counters. Fourth quarter usually is not the most strongest, but given the slew of releases that we've had, will that change this time around? The second stock that we want to talk about is the cement pack. Now, South Indian players, pan India, there has been a price hike, but South India is where the maximum price hike has come in. So is that something that will aid South Indian cement companies? We talk about the air conditioner as well as air cooler stocks. Will the inventory be an issue as far as some of them? And finally, we find out if Wipro's overvalued. Credit Suisse has downgraded the counter given the fact that their earnings rate is much slower than the other peers, but nevertheless the stock is overvalued. That's something that we'll ask our guests at this point of time. But first, let's start with the first stock, and that is the multiplex stock. What we've seen recently is most of the counters like PVR and Inox have managed to rally. Fourth quarter usually is not the best quarter for them given the fact that there are exam times and the movies don't come in. But the recent slew of earnings, be it a Simba or be it an Uri or be it a Gully Boy, all of them have come out with decent numbers. That's what the box office indicates. But does this point that, compared to what we've seen historically, fourth quarter being weak, will fourth quarter be strong for multiplexes this time around? That's something that we want to ask our guest. Avinash, what's your view on the multiplex thing, on these companies? Do you think that fourth quarter will be a strong quarter for them, and what's the outlook?
No, I think Darshan, clearly compared to the third quarter, the fourth quarter could at best be, be more or less be comparable. But I wouldn't expect a very strong kind of increase in top line and profitability. And considering the fact that, of course, there have been some good frontline blockbuster releases. The major part of the releases in 2019 is, obviously scheduled for the second and third quarter of 2019. So I would believe that, the numbers may not be all that bad, but the kind of traction which we could see probably in the fourth quarter may not be very strong both on the top line and bottom line, and even F&B business could be under a little pressure considering the kind of pricing issues which the government had announced. So I think overall it's going to be a steady set of numbers, not very bad, not very good, but clearly the bigger upside could come in the first half of FY20.
How will GST play an impact, because GST prices and GST had come down significantly on this, and that was applicable from 1st of January. Will that have an impact on
that?
The
would definitely have a slightly positive impact on the ticket sales. Basically, GST has definitely made ticket prices more cheaper now. But I think overall you're going to see the bigger impact of GST trickling in, probably, from next year onwards when you can get the complete 12-month cycle, overall. But I would believe that more than the GST impact, I think it's going to be obviously the movie lineup, which is going to be quite strong, from April onwards. So I think probably the April to September period for these companies could be very strong, depending on how these movies play out.
Vineeta, what's your view on multiplex stocks? Are you pitching any of the multiplex stocks to your clients at this point of time?
So right now we have a neutral view on the multiplexes. There are 2-3 reasons. One is they are growing by acquisitions. So and the kind of releases are strong, I would say, going forward. But the occupancy rate, if you look at PVR or Inox, they are not very high, 27 or 33% occupancy rate. So that needs to go up. And with the acquisitions, through the strategy of acquisitions, they're most likely they have an impact on the balance sheet. So P&L at a first look looks good because of the top line and the bottom line increase, but then that surely hampers the balance sheet. So the return on equities for both the companies are not very interesting. So they're around 10 to 12%, and EV upon EBITDA for these two companies are around 9 or 12 in that particular range. So I would not say it's a very good time to buy multiplexes, and considering the slowdown in the mid cap space, we can hold on our investment into these kind of companies for a later.
Okay, Forum, what's your view? Have you recommended any multiplex? There are two listed among the larger ones, Inox and PVR. Any of them that you are recommending to your clients?
Not at the moment, but then we definitely like PVR over Inox, and we feel that though Q4 is a seasonally weak quarter, but then we feel that this trend will change rather, because it's a myth, that of course there's an exam time and that is why people would not go to watch movies. But I don't think so. This is this scenario right now, because we have a changing lifestyle, and of course we are seeing that even in tier 2, tier 3 cities, footfalls are increasing. And secondly, we're seeing a lot of addition in screens also happening for PVR. I mean, I think they have like 75 screens and they want to take it to 90 screens across, nation. So I think tier 2 and tier 3 cities will take quite a, strong role to play in getting the footfalls for PVR. So I think the only reliable among the two is PVR, and it has proved over a period of time. It is doing acquisitions. We have good releases happened in the last month as well, which will definitely add to the top line of the company. And of course the food and beverages segment, which is the value added products for them, it is because of government capping and all, they have slashed the prices, but overall they would still try to expand margins. So we feel that PVR on any declines should be taken in a staggered manner.
Not Inox Leisure.
No, not Inox, because Inox as a brand has we do not have much confidence on that, and we have seen, the results are not up to the mark. There's always whipsaws and all, and PVR is into premium segment also. The kind of screen development and everything they are doing, so I think PVR is any day a better play than Inox. Okay,
Avinash, among the two, which is a better play, PVR or Inox?
No, I think definitely PVR stands out considering the fact that they have been an industry leader and they have a headroom over Inox. But I think clearly in terms of the geographical reach and the kind of screen size, I think PVR definitely deserves a significant premium kind of rating. But as Vineeta pointed out, I think valuations at these prices, Darshan, don't point out to be quite attractive. I would believe that in case the market obviously corrects these prices by say 5 to 10%, that would be a good time to accumulate, because in this fourth quarter I'm not expecting any major earnings kind of fireworks, and possibly most of the stocks would remain range bound.
Okay, that's the view that's coming in. I think PVR takes the cake among the two listed entities as far as multiplex is concerned. So that's the view. The second one is and the sector actually managed to rally. That was the cement sector, and even in the cement sector, it was the South India based companies, be it a Ramco Cement or an India Cement or an Orient Cement, which have focus on South India. They managed to rally. Now the reason is that the dealer check that even Kotak did, we did, Deutsche Bank came out with a report. So a lot of news flows are surrounding that. So it's the steepest hike, almost 40 to 50 rupee hike that was seen on a 50 rupee bag in the February month, and that is something that you're seeing a trend. And now prices are high at the highest level since the past 1 year. What's the view on cement? And is there any player in the South Indian markets that our guests like? We'll ask them. Vineeta, as a sector, cement, are you all constructive on that sector, and do you all like anything in the South India based focused companies?
Yeah, since the last quarter we have changed our standing for cement from neutral to accumulate, and particularly considering the South Indian based companies, there is chances of good volume growth coming forward, because of one was Kerala, which had suffered some monsoon jitters last year, and rehabilitation of Kerala would obviously increase demand. Secondly, in Andhra Pradesh we'll have a new capital now, and because of that we will see a lot of infra activities going forward. Also, we have seen a good amount of capacity addition in cement, particularly for the south based cement, and already the cement capacity was too high, and there are around 20 million ton or so which will be added for the south companies. So capacity utilization remains a concern for us, for these particular companies, but I think volume growth and coupled with the recent price increases, that should have a positive impact on the south based cement. particularly we are liking Ramco Cement in the south, for the south side, and otherwise we are liking ACC in a pan-India presence. If we consider, I think ACC is a good stock one
What
can
makes
have.
you bullish on Ramco? What are the key reasons?
So Ramco, one is the balance sheet, which looks good, because once we go for capacity addition, the important thing is that whether the EBITDA per ton or the EBITDA to net debt level is at a comfortable level or not. For that, Ramco, for most of the mid cap, that remains a concern, because then you get into troubles as far as the net profit margin is concerned. So one is Ramco for that concern. Also the volume growth, if we look for Ramco in the last quarter, it has been 20% plus. So that gives a confidence for us, for the company to do better in the coming quarter.
Okay, Forum, what's the, are you all pushing cement as a theme? And if yes, on a pan-India basis, which stock do you all like? And do you all like anything in the southern facing market companies?
Yes, so cement as a sector, we think we should start looking at it right now, because as we have seen, Q3 did not come with good set of numbers, and Q4 is supposed to be a seasonally good quarter for cement pack. And the fact that we have seen the GST rates cut for affordable housing, we feel that's a huge benefit for the cement companies also, and that is why we should start looking at cement sector as a whole now. Of course, the price hike has come as an add-on benefit for the sector. I think petcoke prices have also fallen down, which would add to the margins increment. So overall, there are a lot of good news for the cement pack. We would like to go with Shri Cement, because Shri Cement, if you see, it's a north-based company. I mean, it's a market leader in the northern area, and it has proved over a period of time that it's delivering very good set of numbers. The CAGR over a period of 10 years at the bottom line has been at what 20%, which is phenomenal. And that is why any pickup in the sector would definitely boost Shri Cement as a stock. It is a tad late overvalued. I think EV by EBITDA stands at 14 times on an FY21 basis, but I think the fact that it has a good management and a good numbers and everything, I think it justifies premium valuations, and that is why Shri Cement is something.
Anything in the South India companies that you all are liking at this point of time, or that's an avoid for you?
No, it's not an avoid, but then I think we like Sagar Cement over there. It has just turned profitable over there, and capacity utilization is also increasing in some of the plants. I think from 65% utilization rate has gone up to like 70%. So I think overall Sagar Cement is also a very good play in the southern side. Though it's a small company, so always there's a risk, whether they would continue to perform at the same rate. But if everything goes good, then I think Sagar Cement is one that we can look at.
Okay, Avinash, your view on the sector, on the best pan-India player, or would you stick to a South India-based company?
No, I think cement prices definitely have moved up, and I think the South-based companies would obviously benefit more. But pan-India level, we also like ACC, considering the fact that it's got a well-diversified geographical locational advantage. But coming to the South-based companies, we also like Ramco Cements, largely because it's a large player, a 15 million ton capacity. Q3 saw a very strong volume growth of almost 21%, and most importantly, the company's balance sheet seems to be solid. In fact, they are talking about 1,000 crore capex, which will be funded largely by internal accruals, and capacity going up by another 6 million tons by FY21. So I think clearly, if one were to take a medium to long term view, I think Ramco Cements definitely should benefit. Operating leverage should kick in possibly from the first half of FY20, and I think looking at the current price, I think if somebody is looking at a 12 to 18 month horizon, I think Ramco Cements definitely can give a decent risk reward.
Okay, that's the view that's coming in on the cement space. The next one is again a theme. It's basically the air cooling solution spaces. It can be the air conditioner or the air cooler, like a Symphony. Now, what we've seen is that over the past few months, the third quarter was not the best. Fourth quarter we move, and then we move on to the first quarter, which is the strongest for them. Fourth quarter generally isn't that strong for them because that's just ahead of the summer season. But inventory levels are at very high levels. The GST number that also came, the increase as far as duties were concerned, that is also not being passed on. So there is a dual impact on some of these manufacturers. What should one do in this space? Will the next 2 quarters be weak for them, or is it time to accumulate? So Forum, I'll start with you. Couple of companies there. You have your Voltas and Havells and Symphony and Whirlpool and that space that works in the cooling solution. Is there anything in this space that you like, or you feel that their pressure points probably will continue over the next 2 quarters?
I feel that Voltas should be a stock that we should look at. Of course, the inventory levels across the board was high, and if we look particularly for Voltas, the management has said that, and we are seeing that the inventory level did come down from Q2 to Q3, and we feel that of course there's going to be a strong summer, and people would the demand would definitely increase for the coolers and the air conditioners. As a result, we feel that we will definitely start seeing good traction from Q4 as well, and Q1 is obviously a seasonally strong quarter, so I think the worst is behind for the sector. Of course, we did not see a good festive demand, but we would start seeing footfalls now, and I think Voltas amongst the entire pack is good. So it's a little overvalued, but then I feel that as the company starts growing, the inventory level keeps on comes to normalize. So Voltas is something that we recommend.
Now, what did you make of Havells move into the air conditioner, because they acquired Lloyd's? You feel that they've been able to pull this off, this acquisition off? They are doing well?
I feel Lloyd was a good brand, so in the southern area, region, so they might get tractions from there. But overall, if you go to see, Voltas is something that is a market leader, and it has good distribution network and everything. So why go with a newcomer rather than stay with
with Voltas? Anything that you all are pushing to your clients in this space, and overall you feel that the next 2 quarters probably will be a little tricky for them?
Yeah, I think we should hold on for in case of these kind of stocks right now. Though long term we don't have any question for their growth, but then particularly coming to the very recent quarters, so the inventory level, as you said, is high right now, and there is a lot of competition. Secondly, the kind of import duties, and because most of them they get particularly Voltas, it gets the cooling system from outside and then it assembles it here, so that will impact the margins. Also, there has been very poor winters, I would say, and followed by hailstorms, etc. So particularly for this quarter, it's a lull quarter, but then going forward also, because the inventories are already there, so I think the top line growth would not be very interesting for the next 2 quarters. Considering the competition, they are not able to take price hikes. Already the inventories are there in the system, so it should be a little difficult. All the players are trying to enter. It's a big pie for Indian. It has to go to tier 2, tier 3 cities. It has to. So the market there is very huge. But then all the companies, they have to position themselves accordingly. So right now you can see Voltas coming out with all. Even Havells, it has a range of products. Small companies are also coming out with a good range of electronics. So I think the competition and the brand positioning has to be played before things. So overall, Voltas is a good play. There is no doubt in the long term holding for any of these Voltas or a Whirlpool or even a Havells. Havells came out with excellent set of numbers, and we are pretty confident on the kind of growth Havells has shown, and the way it has with the crap rate it acquired and the way it came out of it. Things. So we are pretty confident all the companies, but right now we are not pushing any of them.
Okay, Avinash, what's your view on the air cooler, air conditioner? Because Symphony came out with bad numbers for the past few quarters, and for fourth quarter anyway is weak. But do you think that this will again flow into the strongest quarter? Q1 will be impacted big time because of inventory levels, extended cold spells, the Met forecast, everything.
No, I think this time the summer season disappointed almost the entire season period, and obviously that impacted numbers for the coolers as well as the air conditioning players. I would believe that the third quarter has seen a lot of pain. The fourth quarter is also likely to see equal amount of pain, as most of the players are offering pretty good discounts to actually clear their inventories out of the system. And hopefully, if this summer turns out to be good, then definitely one could see a revival in the air conditioner and the cooler market. I think clearly players like Voltas or typically Havels, I would believe these are good opportunities to actually accumulate now, hopefully, considering the fact that these companies have a very strong product kind of bouquet and a kind of a geographical reach. So on declines, I think these companies should be acquired. I would believe that the fourth quarter could be the last quarter where we could see this kind of disappointment.
Okay, that's the view that's coming in on the air cooler space, and the final stock is Wipro. Now, yesterday the counter was down in trade, and overnight news coming in is that they have sold one of their units for almost $100 million. Is it getting rid of the excess baggage that it has and focusing more on the core competence? And the big question we're asking is Wipro overvalued, because the Credit Suisse note that came out highlighted that it's underperforming counters like a TCS, Infosys, and does not probably deserve the valuation that it has. Avinash, your view, is Wipro overvalued? It's been one of the best performing IT stocks of late, despite not the best numbers coming in. You think that valuations are justified?
I think, Darshan, I would put it like this, that numbers for the quarter 3 were quite good. In fact, digital now accounts for almost 32% of their overall revenues, and the BFSI space, the management has clarified that it would do well. The bigger concern is on the margin issue. I think the markets are clearly cautious and watchful on the margin guidance which has been given by the company, and I think clearly fourth quarter could also see the impact of the wage increase, which could possibly have a kind of impact on their overall operating profitability. I would believe that looking at the way things have panned out, I would not be surprised that the fourth quarter could be slightly moderate, and there are many other choices within the IT pack which could possibly offer a better risk reward. So I would not buy Wipro, and if I have Wipro, I could just hold on.
Okay, that's the view that's coming in. Would hold on if you have. Vineeta, Wipro, what should one do?
So as Avinash suggested, that the margin profile might dent going forward. So if you look at the recent numbers were pretty good. The management did not went on and raise the guidance. So that's a point of concern for us. Secondly, if you look at the valuation, it is currently trading at a 3-year high on forward basis. So 3-year high for FY20, it is trading at around 17 to 18 times, which I think is a fair value for Wipro. There are 2-3 concerns. One is that on the margin front, because Infosys or a TCS, they have been doing continuous investments, and Wipro was a late comer in terms of investments for the employees, or even on the training and the kind of investments that they have done. And to get out of that's the reason there has been a wage increase for all the IT companies, and I think Infosys should be one. We should come out of this cycle sooner, and for Wipro there should be much more quarters going forward, so there would be margin deterioration going forward. Though the top line the top line is pretty good for most of the IT companies, digital growing at 30%, having a 30% share in the businesses, but definitely in the margin profile, Wipro will be late to revive, and I think Infosys is being offered at a pretty good valuation, considering that margin appreciation should start from, I think, the next quarter.
Okay, from Wipro, you find it overvalued, or are you pushing this to your clients also?
Yeah, so we find it overvalued, and we definitely do not recommend to buy Wipro because we have many other options available. Of course, from the pack of 5 large caps, TCS is overvalued now, but then Infosys is a good buy, Tech Mahindra is a good buy. So we feel that Wipro, of course, margins have their margins concerned, and Q3 was a little on the growing side, but then of course we do not know whether it's sustainable. But on the other hand, we know that Infosys, TCS, these stocks are going to keep on continuously growing, and that's what management also indicated for TCS. It's going to be a good growing quarter for them in Q4. Digital business is is doing good. For TCS, I think digital business is like 50%, which is highest in the industry. If we see, in the mid-cap space, I think NIT Tech is one, which is again growing at 50%, the digital business segment. So, which is equivalent to TCS, so we like NIT Tech from the mid-cap space, any day above, Wipro. And from the large-cap packs, we feel that Infosys and Tech Mahindra is a better play over Wipro.
Okay, so that's the view that's coming in. I think the view consensus coming in is that valuations certainly are a little stretched as far as Wipro is concerned. Other stocks, at least Infosys or NIT Tech, those are the counters that have been spoken about, would be better bets than Wipro at this point of time. But with that, we're completely timed out on this edition of Hot Money. Many thanks to all of my guests. Thank you so much, Avinash, for coming in. Vineeta Forum, thank you so much for coming in today. Ask BQ comes up next, stay tuned to Bloomberg Quint.